Welcome. This is Kristen Crabtree with Lance Edwards Group. We have a special treat today. We are interviewing a new apartment champion who is here to share his story about how he closed on his first multifamily deal since working with Lance's system. We absolutely will get into some other juicy nuggets because he's done a lot. Please help me welcome Joe. All right. So let me first recap your initial deal a little bit, and then we can get into some of the nuggets about it. So Joe, his first deal was 18 units. He now has 864. His first job outside of college was as a general contractor for a developer. He does rehab and holds. His deal is located in Southgate of Fort Leonard Wood, which I have to ask him where that is because I don't know. So we'll get to that in a second. It's a U.S. Army post with 4,000 soldiers and no housing off post, and it's 18 doors and 21 storage units. He found the deal by working with a broker on other projects. And then I'm also going to have him clarify the financial arrangements that he made because they're a little detailed. He bought it for $936,000, and the ARV, the after repair value, is 1.35. All work is complete, and the project is full and cash flows at about $9,000 to $10,000 per month. So, does that sound like a good summary?
Yeah, I think that's pretty accurate. I understood you to say 4,000 soldiers, but it's actually 40,000 soldiers.
Oh, okay. I may have misspoke. I saw the number, but I may have misspoke. So, thank you. Okay, so why don't you tell me a little about your personal and professional background?
Sure. BS construction management and business, almost 40 years as a commercial general contractor. My largest project was a 66 million truck manufacturing facility for Transwest Trucks in Brighton, Colorado. That frankly was my last large commercial project. Relocated back to Central Missouri. I had done several redevelopments, and I call fix and flips, I call them redevelopments, whether or not it's a single family home, a duplex, a quad, or a multifamily project. In my mind, redevelopment is more professional, and it gives you more credibility with your investors and your lenders. Have completed about 30 of those projects. Obviously, the market has been insanely hot. So we've sold all of our single family homes and we've sold all of our duplexes, and we're focusing directly on the business of small apartments and residential assisted living.
Fantastic. So what got you into assisted living, the residential assisted living?
I was at a masterminds group in Cleveland, and the moderator said, "Hey guys, I want to show you something that I'm kind of working on." And they introduced the concept of residential assisted living, and the founder, a gentleman named Gene Garino, he and his wife Mona were on vacation in Hawaii. And this was about 4 years ago, pretty much before the pandemic and Zoom. Anyway, so he made his presentation. I looked at the fellow sitting next to me, and we had become friends. And he had done hundreds of redevelopments, and we looked at each other and we say, "Holy crow, why are we not doing this?" And I can tell you why a lot of people don't do it. It's insanely time consuming. It's insanely expensive. You have a myriad of regulations, both with city, state, federal. You have to deal with HOAs and all of the developmental processes. But the beauty of these projects, once you get stabilized, the pro forma numbers are can be very lucrative, if we do a good job of managing our clients, who we call Daughter Judy, which is not our resident. Okay, our client would be the family, and our resident is that lives in our home. So it's it's a multi-pronged issue where you just have your staff and your people and your caregivers, and then you have to keep mom happy, and then you got to keep daughter Judy happy, and that's a big it's a big juggle. But there's 77 million seniors out there, and in one location, I need 36 of them. So if we do a really good job, we'll have no problem attracting residents.
Okay, fantastic. Great. So let's switch gears and talk about the olden days, about what got you started in multifamily investing. So why did you start researching and pursuing multifamily investing?
Um, quite frankly, I got bored with single families. There were a lot of people that were entering the market. The market was greatly inflated. The attraction of subcontractors and vendors, even though I'd been in this market for almost 30 years, I knew everybody, but um, vendors were just giving prices. There was really no value to what they were providing. The competition really, really heated up. Um, I had done a couple of smaller projects, did a quad, and then had worked. One of my investor partners is a very successful developer, and his projects are in the 100 to 200 door range per unit, and something maybe in the 18 to 30 million dollars, and and I was sharing with him an opportunity that I was underwriting, and I said, Jim, how come I can't get you excited in this? He said, it's too small. He said it takes the same amount of brain power to do $1 million deal as it takes to do a $20 million deal. And so he said, find me the $20 million that works and I'll do it. And what I've learned through the journey is, Lance's model is spot on. I mean, it's just spot on. 20 to 30, 40, 50 doors, that's too big for the little guys, and it's not big enough for the big guys. So there's definitely a sweet spot right there. And I mean, he's hit that right on the head.
Fantastic. So how many single family residence properties projects had you done prior to switching to multifamily?
27.
Okay. And what got you into what were you trying to solve through real estate investing, period? Like whether we talk about single family or multifamily.
Um, Passive income, uh, eliminating myself from the day-to-day dealings of, construction and property management. You never get out of it. If you're going to be an entrepreneur, you have to manage your manager. You have to manage your uh, project managers. You have to manage your property managers. And the single family and small duplexes, thing like that, they're not big enough unless you got a huge portfolio. They're not big enough to have on-site people. And then if those people are segregated across, a community, whether a big community or a small community, then you got commute and you got all that overhead. And, if that door goes dark, you're dark. And so now, that asset is an underperforming asset. In multifamily, we can, on our very first deal, 18 units, we ended up trading out most all of those residents just because they were not very nice people. They were not playing by the rules. They kind of thought they got to stay without paying their rent. Oh, and the towel bar just flew off the wall. What they forgot to tell us is that their little kid was trying to do chin-ups in the bathroom. So, as you can eliminate, maybe some not so worthy residents. I mean, those folks, they're good. They got to live somewhere, but they can go bother somebody else. I mean, we're building assets for passive income, and I want to be able to do a turn. I don't want to have to do a complete overhaul on that unit just to get it ready. So, that gets you into the management of people and the management of your manager. Are they just filling the unit, which of course we want them full. But on the other hand, we are really pretty specific on the credit and their ability to satisfy their obligation. As we know, getting someone in is easy. Getting them out sometimes can be kind of hard. But, you can lose 2 or 3 or 4 doors, on an 18 unit project. It's not pretty, but you can survive that. If you have a portfolio of 4 duplexes and you lose those 4 doors, you're immediately in the red, and that's not a good place to be. I don't look good in red.
So let's talk about that 18 unit property. I obviously was not clear exactly where it is. So where is that base? Tell us a little bit about it.
Sure, the location is very, very rural. It does not check any of the credential boxes. However, Fort Leonard Wood is 6 miles to the north, and Fort Leonard Wood is a U.S. Army's installation. It's the basic training school for the Army. It's the engineers training school for the Army. It's the military police training school and the chemical warfare school for all of the services. So there's
What
40,000.
state are we talking about?
We're in Missouri, central Missouri.
Okay.
Yeah, central Missouri and rural central Missouri. So um, that post is an economic wheel for many, many counties. But with 40,000 soldiers, that does not even include their families. And the Pentagon seems fit to add a $250 million hospital, to the post. So when we were stabilizing, we had some construction crews, living in our units, just because they were, like I say, 6 miles from work. And we had them on months to month at almost double rents, just because, that was less money than what they could rent an apartment for when they were out there in their, when they were out there trying to um, stay. They might be, one trade, for example, was with us for almost 18 months at double the market rent because he liked it. It was rural. It wasn't a hotel. And so it's a rural environment, and we do have some active duty military, as residents. We have a very strong relationship with the housing administrator, on post. So that's all very beneficial for us.
Fantastic. And what year did you do that deal in?
Oh, I think we did that in 2008, 18, I think.
Okay. And what was your financial situation like before you began investing?
Um, you know, uh, Blue collar guy gets out of bed and goes to work every day. Um, I had always had a managerial role, in my previous business, so that was good. Um, but yeah, I'm a blue collar guy, and this thing, the thing that's interesting about this, it's not instant wealth, but what it is consistent. And so, if you play by the rules and you're knocking down $100 a door or more per deal, then the focus is on adding doors and how quickly can you add quality doors. And it becomes less a situation as, am I drawing a salary? Because the other benefits of being a business owner is all of those expenses that in some cases are living expenses, as long as they're legitimate business expenses, all of those things are an expense to the business, which is a direct write-off from your income. And the other beauty of it is, the IRS has given us the ability with a real good accountant to play by all the rules and minimize all your taxes. Um, so, as a project is stabilized, you get into a cost segregation study and you can immediately advance that depreciation. And those numbers get negative really big, really fast, which is a big positive when you're talking to the IRS.
Fantastic. Do you have a specific financial goal that you're shooting for?
Big. Yeah, big. I would tell you in the next 5 years, we'll have about 2,500 multifamily units, and we'll have about 180 residential assisted living beds.
Fantastic. So this big goal, what will that do for you?
Let me get on my bicycle in Portland, Oregon, and ride to Portland, Maine, and not have to go to work.
Great. So is that your ultimate dream, or how would you describe your ultimate dream?
No, my ultimate dream is to build the portfolio, build the business. Oldest son Drew is an attorney. He may want to join us one day. Younger son Connor, he's been bit. I mean, he's been to the 3-day. He has been bit by this bug, and he wants in. His goal at this point, he's in his second year of graduate school, so he needs to finish graduate school, and he'll pursue that. But he'll be involved in our business as a side hustle. Connor's already an investor in our business. Drew's an investor in our business, and it's pretty cool to have the guys kind of want to maybe do what Dad's doing. Don't know if that's going to happen, but it could be kind of cool if it works. The end goal really and truly is to work. I enjoy getting out of bed and going to work. I'll never retire. Probably I won't be working the hours that I work now, but at the end of the day, the freedom, I mean, when you have financial freedom, it just makes all kinds of other opportunities open. And whether that is community service, or whether it is another endeavor that you really want to pursue, whether you're helping other community peoples, or you're able to help a young man that made some bad decisions as a high school kid. It just opens those horizons. But what it really does, it gives you the ability to live your life how you want to live it. How do you want to spend your life with your wife? How do you want to spend your life with your kids? Do you want to travel? Do you want to go fishing? Do you want to play golf? Do you want to ride your bicycle? It just gives you options, and it pays down debt. And when you don't have any debt, life can get pretty good pretty quick.
So what are the specific options that you're looking to pursue with your financial independence?
Well, we will certainly. We've got some philanthropics we're pretty dedicated with, and the Duo Dogs Foundation in St. Louis is near and dear to us. I have become very, very involved with Wild Rose Kennels in Oxford, Mississippi. They train gentlemen gun dogs. I'm a big outdoorsman, so I would imagine you'll see us with assets where there's a lot of pheasants, there are a lot of grouse, there's a lot of quail, and then can't leave the ducks out for the wintertime. So there's probably going to be some things on the Arkansas and Louisiana flyway.
All right. And sorry, Dad.
So essentially what I think the answer to your question is, we're just trying to fund a lifestyle. And when we do that, it's not all about me. It has to be about others. And it's pretty easy to say that you want to take care of your wife and your kids, and you want to donate to whatever your charity is, or your church, or your synagogue, or whatever is dear to your heart. But what you got to have is a why, and that why can be anything. The only thing I would suggest is it's got to be so big that everybody you tell, they look at you, say, you have lost your ever loving mind. There's no way in hell. And when somebody tells me there's no way, just hide and watch, get out of the way and hide and watch and see.
So can you tell us specifically what your why is? I'm sure you have it written on your board somewhere or something.
I first started with 500 doors. And 500 doors is roughly a annual income of $400,000 to $500,000. It's a lot of money, but that's not a lot of money. I mean, it is a lot of money, but in the scheme of things out there, it's really not a lot. I don't say that to be arrogant. It's just, um, whenever you think you got it going on, you just go to some event, you just find out how much you don't have going on. Um, but I really started because I was really good at what I did as a commercial contractor, and I had a lot of very, very good clients. I built 177 Walmarts and Sam's Clubs. I have relationships with property owners. I've done all their stuff for the last 15 years. So I'm a real big relationship guy. And what I wanted to do was go to work. And I hated going to work. I was good at what I did, but I hated going to work. And I had a couple of little small residential redevelopments, and I was wrapping up this big project in Denver, and the goal was to move to the mountains. Well, the fact of the matter is, we couldn't afford to live in the mountains. It's fun to go for a week, but to try to live there, I mean, just economically wasn't possible. So I got to thinking, before I jumped into another $50 million project, I wonder if I could build a business, one house, one duplex at a time. And, fortunately, I was able to do that. And because I quit my job and I started. I mean, I burned the ship. And so it was not like I could say, oh, I'm just going to do this on the weekend, because now I couldn't do it. So that why, as the business grew, that why just got bigger and bigger and bigger, and the parameters changed. And it kind of gets to a point that, you look at your longevity, and at, 62 years old, I'm a pretty healthy, fit guy. But 2 weeks ago, we just buried one of my fraternity brothers, so you just never know, when you're going to be called, and when you're called, you're called, and guess what? You don't get a choice. So my big why was to go to work so I didn't have to go to work.
In what ways were you hoping real estate investing would change your life?
Oh, just financially, from immediate cash flow to, um, some quick cash, on a wholesale project, or an acquisition fee on a purchase. When we do a purchase, we always put in a 3% acquisition fee. And I just use that to, cover overhead, but it's immediate cash in your pocket. But the benefit of multifamily and the longevity of multifamily is, if you do a good job, and we're not perfect, and I've had to say I'm sorry a lot, but at the end of the day, theoretically, you've got others helping you pay down the debt, which increases your equity, which gives you more liquidity, which gives you the ability to go to the bank next time and say, here, we just completed this deal and I want to do this one. And it gives you not only credibility, but it gives you equity and structure to your business. And inside that business, then you can zero down on which way you want to go with your business. And I'm not at all suggesting that you shouldn't do duplexes and fourplexes or eightplexes or anything like that. I've just, for me personally, have gotten to a point where they're great, and we partner, with some smaller investors on some things. Um, and then we're partners with bigger investors on bigger deals, and that helps you grow your door count all at the same time. So passively, you're investing in other projects. You may not own, all of that project. Who cares? They're doing all the work. And what I know is every quarter, my self-directed Roth gets a check every quarter. And I've done nothing but sign the PPM, probably didn't even read the whole PPM.
So where did you get stuck? What made you seek help from Lance Edwards?
Well, um, I felt like I knew enough to be dangerous. And um, the program is really straightforward. It's really straightforward. I love the deal sheet. It makes things super easy to identify a project to a deal. And I felt like that I just really needed an expert to help me get there. I didn't need him to get me out of bed and go to work. I just need him from keeping me from doing stupid mistakes. And the forms are there, the legacies are there, the reputation is there. Hoku was my coach. She was really, really good. She's very patient with me, and just kind of helped me go. But I did not need the kick to get going. I was already motivated to go.
All right. You've mentioned that your sons are excited about investing. Do you have a spouse? Was that person excited as well and supportive, or was there
Very,
a
yeah, very, very supportive.
okay?
Very supportive.
What obstacles did you face when you got started?
Cash flow. Cash flow. You're starting with nothing. Now, the good news is, we had some savings, had some equity in our home, and that made things a little easier. But as you grow, the issue is always cash flow, and it's always an issue of leveraging your debt. And and every deal has a life of its own. And when you look at those projects, whether it's a $200,000 project, it's a $2 million project, you still have to raise the equity, or you have to have it on your balance sheet, one of the two. And if you don't have it on your balance sheet, you got to go find it. And I'm here to tell you, there is a bazillion people out there that are looking to work with people that want to get out of bed and go to work. So you're developing those relationships. And I mean, I was fairly well known, in the community. I'd been involved in the Rotary and been involved in, the Chamber of Commerce and, different organizations. But you have to get out there and just be met. Just, you're not trying to impress anybody. All you're trying to do is make relationships. And as you talk to those people, and you tell them what you're doing, and you're really not selling. All you're doing is talking. You're having a conversation. And you might say something like, like I'm visiting with somebody, and I say, hey, I'm working on this project and we're getting ready to do an equity raise. And we're kind of looking for those folks that might want a double-digit rate of return, for a certain period of time. And, might you know anybody like that? And oftentimes they go, well, yeah, what about me? And, we've done that, a bunch of times. And then, once you have your investor pool, then that investor pool just grows because they talk to their friends and their friends talk to their friends. And at least what we found is when you have, um, say, you have a physician or an attorney or a wealth manager or somebody that's really, you know in their colleagues are kind of in that circle. Some of those folks kind of like to one up each other. And they're I'm not even involved in the conversation, but say they're playing golf and they say, I just did deal with this Joe guy. That was pretty cool. Well, what'd you do? Well, we put in $100,000 for a 10% pref. Well, holy crap, I lost 10% in my stock market last month, and but it's not a selling process, it's a relationship process.
Okay, so that's probably a good segue to explain the financial um, situation with the 18 unit, the notes that I was confused about. So how did that go down? How did you manage that?
So I was in a BNI group, And I just said that I was working on, on a newer redevelopment, and I was looking for an equity investor or two. And I had done some private money with some other people that were in that group, and those were successful. And so they were immediately positive. Um, and actually, one of the members' husbands, um, she says, maybe you may want to talk to my husband. He might want to talk to you about this. So we had lunch and we talked a couple of times, and I shared the numbers and back and forth. And I already had the financing secured. I was just looking for the equity, and he put up the equity, and I took the bank loan. So for that, he gets a pref, and he gets 30% of the deal. So essentially, I've got 70%. I've done all the work, but I've done it with his money.
Got it. So the cash flow hurdles. Obviously you have found great ways of getting past those and overcoming them. Was there ever like a sticking point where you weren't sure if you were going to overcome the hurdles? And if so, how did you manage that psychologically?
Yeah, I mean, it happens all the time. You know, if you're going to be in this business, you have to be able to be punched in the nose and get back up. It's inevitable. There's no perfect deal out there, and we've had some really successful ones, and we've had some not so much. But at the end of the day, you just can't quit. I mean, if you quit, then what are you going to do? Now you got to go to a job, right? And you got to go have the man tell you, now the guy's going to pay you a lot of money. Right? He's going to, senior project managers for commercial construction, aren't starving to death. But at the end of the day, what it really takes is for you to have a I don't care what it takes, I'm not going to quit. And that's huge. And I get told all the time, well, that's just because, you got a big ego. Well, I do, but I'm lots of things, but I'm not a loser and I'm not a quitter. And I think that's something. It is something inside, whatever motivates you. You got to put that on your mirror, on your computer. I have a little saying here that one of my masterminds said several years ago. He says, "Get comfortable with being uncomfortable." Right? I've got another one that says, "Impossible is possible." And then another one, "Be daring." Um, And I don't know if you're a Yellowstone fan, but I'm a Yellowstone fan. And John Dutton says it's hard to measure almost because almost doesn't matter. So, whatever it is that makes you get out of bed and go to work, that's that's what keeps you going. So, in terms of cash flow, yeah, there were lots of times where, um, you know, I had tons and tons of credit card debt because it's the only way I could. That's the only way I could raise the money. Home equity line of credit was the only way I could get the money. And then you do a project and you kind of start knocking that stuff down. And I mean, we transferred balances from one card to the other. Um, I went out and raised a private investor and just, I needed $50,000. So I went to one of my investors and told him I was cash poor and I needed $50,000. And he said, "How long do you need it for?" So, we did that. And of course, I had to sign a promissory note because bank wasn't going to loan us any more money. We were already tapped out. And then we were working on a bigger project, and we had all of the equity secured, and one of our primary guys just didn't close. So I was scrambling now, but I needed 2.3 million, and my closing was 10 days out. And I just learned this 10 days out. So, you go back to the Rolodex and figure out, who's got that kind of money. And it comes from a relationship for a guy that I've had for 40 years. He's wanted me to work for him for 40 years. And I just really never did it. And he was willing to loan me $2.36 million. So it's all about relationships, and it's all about just don't quit. Think about, when you think your life is pretty crappy, look around, and your life is really pretty good. But it's a matter of your attitude, and it's a matter of how do you stay focused on the prize? What is the goal? Right. And for me, I've done 13 Ironmen, so that means that I don't get to quit. Theoretically, if the stars align, I'll qualify next year at Ironman Alaska. I'll qualify for Ironman Legacy, which will get me to Kona, which I'll be able to do my 20th Ironman for my 65th birthday. And then I'm going to take off on the Appalachian Trail, and I'm going to bust that. And at the same time, the revenue just keeps coming in, and you're building your team, always building your team, so you can check out for 10 days, and business is going to go. And if you don't have that team that you totally trust and totally support, doesn't mean they're going to make the right decisions all the time. I have personally put anchor bolts in the wrong spot. I personally ordered the wrong stuff. I personally had to look at clients and say, oh man, I am sorry, I'm a douchebag, but I will make it right. And it's all about relationships, and it's all about not quitting.
So I have a couple of follow-up questions. With that mounting debt, did you ever get overwhelmed or scared during those times?
Yeah. Or hell yeah. But again, I just thought, we started this thing to be different. And you just, like I say, it's not a 40-hour week. Now it's a 90-hour week, or it's a 100-hour week. And, you're walking around glass-eyed and stupid, but just keep shoving those things in the pipeline, just shoving them in, shoving it in, shoving it in. And the other piece of advice is, if you're trying to make a project work to be a deal, throw it in the trash and go look for the next one. And you might look for 50 projects, and I call them projects until they're deals. I think just another way to differentiate. Too often we hear, well, I got a deal, I got a deal, I got a deal. And, I was guilty of this too early on, because I needed the fee. I needed the wholesale fee. I needed the acquisition fee to do it. So you want to try to scrub your numbers to make them something that they're really not. And I made that mistake more than once. But you make it about 3 times, and you learn that, if it's telling you don't do it, don't do it. And the deal sheet, the new dealable deal sheet, that just, it's 6th grade math, and when you take it to that level and you have that tool, that tool right there is everything that helped, besides the will never to quit, and besides the big, big goals. That tool is everything.
Great. The other follow-up question I had, you were talking about the Ironman that you've done, which is awesome, by the way. So my question was going to be, before I heard that, was going to be, how has investing in real estate impacted other areas of your life? Is that a way, or what are some ways that have been some areas of your life that have been impacted through your investing success?
Oh, it's a total lifestyle change. It's absolutely a total lifestyle change. So I'm an early bird, and I can, my office is my dining room. So my dining room, I think it looks like an office. Some people say it looks pretty wild, and there's some wild stuff hanging around here a bit. Um, um, so you get out of bed, do your workout, go to work, and sometimes you just it's not coming together. The numbers don't work. I know this works. Or you got some contractor that's supposed to be doing something that he's not doing, or whatever, and your brain gets fogged. So when I get kind of hung up, I'll go for a bike ride. you know um I might get in my truck and drive around and look at projects. I'll get in my truck and I'll go in competitors' projects. What are they doing? Because you know what? They're competitors, but they may be doing some really cool stuff. And it's good to know, what the other guys are doing. But it's a lifestyle thing where if you're having a bad day, grab the dog and go for a walk. It's not like you get your 10-minute coffee break. Now, the 10-minute coffee break for me might be 3 hours on a walk or 4 hours. But the other thing is it gives you the freedom to, go to your kids' events or to travel, or in my case, be outside. I love the outside, love being outside in the summertime on a bicycle, and in the fall, I'm in the woods, and in the wintertime, I'm on the mountain. But this business allows you to take that laptop, as long as you've got a good internet connection, your business can run from um, I have actually worked on my business while in my deer stand. I have actually closed a deal on a ski trip. So, again, take the blinders off and get creative. But um, you can't quit. And so now you're on that ski trip and you're in some restaurant, waiting for your table, and you're chatting up the guy next to you, and you ask him what he does for a living. And he's, oh, I'm an orthopedic surgeon. I said, oh man, I bet, you work a lot. He goes, yeah, because I'm not making any money unless my hand's on somebody's knee. And I thought, well, this looks like a guy that might want to invest in me passively. So I say, well, I raise private capital, for real estate projects, and we pay fixed double-digit rate of return, and we're always looking for folks that may want to join our network of investors. Here's my card. Let's talk. And now, I mean, I get that guy, but at least there's another contact out there, in the database. And as a matter of fact, I did get an investor going up the ski lift at uh, a basin last winter.
So again, relationships.
Yeah, it's a relationship thing. And you're not selling. All you're doing is asking somebody what they do, and most people will ask you what you do, and that's your door.
So we talked about your roots are sort of as a blue collar guy, transition to an investor, had a lot of debt. How would you say your current financial situation has changed now as compared to like those two moments in time?
Well, most college kids are broke. So you graduate and you go get a job and you save some money and you buy a house and you buy a car and you get married and you have a couple of kids and you always have debt, and that's kind of the cycle. And you're saving for your 401k, and you're saving, in your equities or whatever you're investing in. As your business grows and as you see some successes, what you see is those numbers start to get bigger faster. And so you're paying down the debt, and you're able to save for your kids' college education, and you're able to help your neighbor. You're able to help another kid whose dad was really not a very nice boy, and there's just other things you can do for your business. It's not all about making money. I would tell you it's all about lifestyle, and it's all about, how do I get to live, for me and my family, and you know, when I was working for the developers, most of these guys, you know, were really, really good guys. And I have one developer that I've done things for almost 20 years. We are friends. We're business partners in deals. I do a lot of his construction management, um, and he's been a mentor. And he told me something one time. He says, "I've been broke 3 times in my life, and I don't want to be broke again." And I would tell you that I've been broke twice in my life, and I don't want to be broke again. So, you know, it's not immediate riches. It is being very consistent, looking at the projects, making a project a deal, managing that project, and going to find the next one, you know, one door at a time.
You've made reference twice, and I don't know if this is just a, for instance, or if it is a real experience that you had about helping the boy whose dad wasn't nice. So is that a story?
Um, yeah, I mean, I think so. There's a young man that was a very good friend of my son, one of my sons. He's a good kid, he's a smart kid, just made some bad decisions, you know, as a young man. Um, was in a bad relationship. Um, Parents were okay, you know, um, but he was living with a fella that passed away, and he and the gentleman's son did not get along. And my son said, "Hey, I'm going to go, you know, help Kyle move." And I went, "Okay, cool." Well, a couple days later, he comes to me and he said, "Hey, Dad," he said, "remember when I told you to help Kyle move?" And I said, "Yeah." He said, "Well, I moved him out of his house." And I said, "Well, where's he staying?" He said, "He's staying in the back of his car. His car doesn't run." And he said, "Do you think Kyle could stay with us for a while?" I said, "Yeah, you know, no problem. We've got room. Drag him in here." So he came in very polite and sat down, and I said, "Look, we got some rules around here, and these rules are not negotiable. Come tomorrow, I'm going to give you the name of a half a dozen people that I know need help. And by Friday, you will have a job, or you and your duffel bag will be on the curb. Are you okay with that?" "Yes, sir. I'll do that." So next day he comes at dinner time and he said, "Hey, I need your advice on, you know, one of these two guys, because they all offered me jobs and a couple of them I don't really want to do." So we kind of went through the pros and cons, and I said, "You're a big boy. You know, if I were you, I would do this." Okay, so fast forward, he helps with chores around the house and just, you know, just little stuff. And then he decided that he needed a car. I said, "Yeah, you don't need a car. Car's expensive. You don't need a car." And he goes, "Well, how am I going to get to work?" I said, "Well, you know, pawn shop's got a bicycle, you know, well, then I have to, yep, that's what you got to do. Get on that bicycle and go to work." What do I do every day? Get out of bed and go to work. So anyway, fast forward another couple of months, and I said, "You know, what's the plan here, really? I mean, well, you know, um, I don't know." And I said, "I don't know, doesn't count. You know, I don't know, doesn't count." Because one of the other rules that I gave him was, you're going to lose the smokes. You got no money for cigarettes, and no girlfriends. You got no money for girls. Girls are expensive. I'm not saying that you can't do what you got to do, but just be careful and don't do anything stupid. Yes, sir, I understand. Well, I need to now we're 3 months in and I'm starting to get anxious. Okay, really, what's the plan? Well, I need to buy a car, so I get, nah, don't need a car. What's next? Well, I got this girlfriend. No, no girlfriend. What's next? And anyway, so he decided that he was going to move to an apartment. He moved to one of our units, as a matter of fact, that had just gone dark. And it was okay. You know, it was a nice home. It was more than anything he's ever had before. And I said, here, you call up this property manager and he'll take care of you. Just make sure you tell him I told you to call. You got to fill out the application. So I showed him how to do all that. And then, and this is kind of where the magic started. He fell behind on his rent. Property manager calls me, he goes, Joe, you know this guy? And he said, I told you, don't put him in one of your buildings. I said, you know what? He can do it. You know, we just gotta, you know, he's got a bump in the road. You know, so let's just limp along with him. Just make a deal with him. He gets paid on Friday, get part of his rent on Friday or every other Friday or however it works. I don't care. Okay. But he's not going to step out on us. So I decided that I was going to sell the building. And of course, the leases went with the buildings. And so he stayed there. He completed his contract, got all of his back rent paid up. And he called me. I was on a project last week, and this is where it really, really gets cool. He called me and he goes, Mr. Greaves, he says, I need to really thank you. You trusted me. You trusted me when no one else would trust me. And you took a chance on me. And you put your reputation out there for me. He said, I want to tell you that I've made a decision and I'm going to join the Marine Corps. And I think that is absolutely outstanding. Connor, my son Connor's a Marine. And I think that's absolutely outstanding. Now, here's the deal. Now you get out of bed and go to work. You're already disciplined enough. So when you got some DI up your butt, you know how to handle that. And you've already got life experience. So you will already be a platoon leader because you're more mature. Now you get to pay it forward. And you'll start as a private and you can do if you want to do your whole career, you just do your tour. It doesn't matter. But now you have stability. Now you have a job. Now you have training. Now you have the legacy of being a United States Marine. And all these steps is what it takes to get to wherever you're going. And the other thing I'm going to tell you is you better figure out where you're going. And I'm going to tell you don't know where you're going. I don't think any of us know really where we're going. We just kind of think we know where we're going because life is going to tell you where you're going. And then you get the ability to decide, I don't like that way. So that means I got to do something else. So, yeah. So, you know, we've helped a couple young men like that, but, you know, that kid's life's turned around. And yeah, you know, he lived here rent free. Who cares? You know, but we turned him around and now he is on the path to success.
That's an amazing story. Thank you for sharing it. Um, what did you hope would happen that hasn't?
I thought I'd be stabilized in 6 years. And we're not stabilized yet because the goals just keep getting bigger. They just keep getting bigger. And what stabilization look like? 2,500 doors and 180 beds. You know, and to put that into perspective, that would be a market portfolio pushing $200 million. Those are real dollars. Those, you know, and there's all kinds of funds, offices, home offices, legacy funds, Wall Street funds, pension funds. They're looking for stable assets. So at the same time, we're building passive income, we're building legacy wealth, and we're also helping our communities, and we're also helping individuals. We're living a pretty good lifestyle. And at the end of the day, there's an exit strategy that's a given because it's an asset. It's not an equity. It's not a piece of paper. You know, tell me what the stock market's doing. I'll tell you what you're worth. I can tell you what I'm worth depending upon whatever the cap rate is.
So what's happened that surprised you?
I'm not as good as I thought I was. you know, it's pretty easy to get into this business. It's hard to stay in it because it of the staying power. I'm not talking just about, you know, the emotional power. Your family and your spouse has got to support what you're doing. I'm not saying you can't be successful outside of that, but that really helps. As soon as you can um, get rid of your day job and really focus on your business, you'll start seeing milestones. But you know, at the end of the day, it's it's very humbling. You know, I'm a pretty aggressive guy, with a pretty aggressive ego. And when things don't go the way I want it to go, I had to learn to ratchet it back a notch, you know, because most people aren't hard chargers. Doesn't make them bad people, doesn't make them bad business partners, doesn't make them bad associates. But it was really hard, it was really difficult for me, just emotionally, to be on the hook for so much debt and, you know, somebody else not care, you know, because to them it's just a job, right? So what that tells us is that if it's just a job to them, they're not right to be part of your team. And it's hard because I had to let a friend go, a friend that needed the job. And I really thought I was helping that friend. Um, but I wasn't helping him and they weren't coming along, and it just got very tenuous, and so we made a separation.
What excites you about the future and the possibilities it holds?
Oh, I mean, world's a big place. There's lots of things. There's lots of things I want to do. Um, you know, we ski a lot. We ride bicycles a lot. We travel a lot, and we work a lot. Um, but the possibilities, you know, when you're not worried about being paid, the possibilities are endless. And, you know, so now, you know, the goals are, how do we get, you know, how do we get those that have helped us get where we are? How do we, you know, how do we help them? Can we advance their retirement? You know, 2 years, you know, that's a goal, right? I want to advance. I want to advance a retirement. And it's going to be really cool when it happens because they don't know it's coming. Um, and when you look at what do you want to do with your life, and I mentioned that we buried one of my buddies. Well, last year we had another one, 61 years old, dropped dead of a heart for perfectly good health, dropped dead of a heart attack. You know, you never know when your time is, so you need to make time while you got time. And like I said earlier, I never see myself retiring. I really love what I'm doing. There's some things about the day that I don't love what I'm doing, but you know, at the end of the day, we get to control our life. And you know, what do you want to have for dinner tonight? It's pretty cool to be able to put a pork loin, you know, on the smoker and go check it at 3 o'clock in the afternoon because it's out on the back deck and you don't have to drive home to check it. You know, I mean, I know that's something simple, but it's just it's fun to have the freedom to do what you want to do as long as you're responsible in those things that you're trying to do.
What strengths do you possess that made this endeavor easier for you?
I wouldn't say it's easy. Um, you know, um, I like nice stuff. And I got involved in this business because I was working for a gentleman that had nice stuff. And I was the guy building their really nice stuff. And I would get a phone call from some vacation saying, "Hey, how are we doing on this?" You know, and I just saw that, and I saw that lifestyle. Again, I mean, that creates a whole nother set of issues. You know, I mean, their life isn't perfect either, but that was a real motivator for me. And you know, my big strength is I'm a big vision guy. I'm probably not so good with the details, so I need to have people that are better with details than I am. I'm a big picture finance guy. I'm not a zero in on the numbers guy, so some of the lenders that we work with, they're finance peoples. That's what they get paid to do. So I don't have to be an expert. All I have to do is pick the good guy, right? The good woman. And at the end of the day, my life becomes one of managing the task and not managing the details. And there was a gentleman that I've mentioned before that I've worked with on many, many projects. And I like his model. He travels a lot. He's got really, really good people that he's had for years. He pays them really well to keep them. And that gives him some freedom, when he's gone on safari for 3 weeks, or he's down at the Galapagos for 3 weeks, or wherever. I mean, his business just continues to churn.
So what's changed about who you are since you started down this path?
I've become a lot more mellow. Earlier in my career, I've always been a hard charger, but I've become more patient, and there would be some that would argue that, but I think I've become a lot more patient, and I become more aware that everybody's not the same. You know, when I was growing up, I thought everybody was a high school jock. They played baseball and soccer. Oh, and they started. Oh, and then you graduate and you go to college. Oh, you play college baseball. Oh, and you graduate on time. I thought everybody did that. And then I got out of school in 1982, and inflation was 17%, and nobody was building anything, and I was lucky enough to get a job. Well, yippee for me. But then I started on the road. That's where I really learned that I didn't know half of what I thought I did. And I needed to really, listen, to the senior guys that were, on those job sites. I was a young superintendent. I was the boss, but I was 25 years old. And so the drywall guy became, my drywall expert, and the plumber, became the plumbing expert, and electrician, and so on and so forth. And as I was able to mature and grow, you don't have to be the expert on everything. You just have to know a little bit about everything. And and um, I would get, and I still do, I would get insanely frustrated because someone told me a story, and I knew they were fibbing. It just I just knew. Um, I w- and I still get frustrated with that, but now it's like, I don't need to work with you. If you're gonna be like that, I don't need to be around you. So I think I've really mellowed. What I haven't learned to accept yet is why people don't care. I don't understand. If you have a job, your job is to go to work, do the best you can. You're going to make mistakes, but I mean, that's your job. That's why you're getting paid. And what I've learned is most people don't care. They get out of bed and they go to work because they need to be paid. And what I've learned is most people work Friday to Friday. And that's a bad place to be. And I mean, I've been there, and I don't ever want to go back there. Um, uh, but I learned early on, 8 years old, mowing lawns, I learned that the kitty was a savings account. So I had to put 10% of every lawn job in the kitty, and the kitty was a manila envelope. And I write down Mrs. Minderman's name, $3. So I got to put 30 cents in the kitty. And it's amazing, 30 cents, when you're 8 years old, how much that grows to until you run over Mrs. Geyer's gas main and it costs you $97. I remember that like it was yesterday. I was 8 years old. It costs you $97 to get your lawnmower fixed. So I kind of drilled that down into my boys, into savings and plans and goals and where you're going and how you're going to get there and all these other sorts of things. But I would tell you that wherever you think you're going is not where you're going to end up. And life's going to tell you where you're going, and then you got to figure out how you're going to end up where you want to be.
So last question. What advice do you have to offer to others?
Don't quit. Don't quit. I said earlier, you're going to get punched in the nose. You're going to make bad decisions. You're going to have people you trusted lie to you. You're going to have people you trusted steal from you. You're going to go through some highs and lows, good and bad. You'll be times when you just want to quit because you can't do it anymore because I got so much on my plate and I just can't do it. And then other times you're going to say, holy crow, I'm really glad that I stuck with this because I got $1,000 in mailbox money this month. So it's all about attitude, and it's all about that why. Make that why so big, so preposterous, so onerous that when you tell your mother or your spouse or your best friend or whomever, they look you square in the eye and say, you are none in a loon. There is no way. And then you just ball up and say, hide and watch and see.
What a great way to end. With Lance Edwards, this is Kristen Crabtree. Please join us again when we interview our next department champion. If you'd like to learn how you could be our next department champion, please call our office at 281-667-3638. You're only one deal away.